What's going on, everybody? Snowski here, coming back with another YouTube video. I hope you guys are having a wonderful Friday, coming to a close of our week. Today is currently the 13th of February 2026, and coming into today's video, something very important that we are going to be talking about. Pretty much two different things we're going to be putting great emphasis on today. Is one, today going to be a trade recap of how I was able to short the market coming into 30-minute power of 3, capturing pretty much 92-ish handles on shorts on NQ this morning, but also putting a lot of emphasis on our higher time frame regarding a current market maker sell model on our 1 hour time frame. So before we actually hop into before we actually hop into today's video, if you guys aren't already part of Collectors Club, my 100% free Discord server where I constantly put free Snowski outlooks for you guys on what I'm anticipating the market to do, such as literally yesterday, where I stated that now that we've officially completed our weekly Power of 3 distribution, I'm expecting that today, while I put that as tomorrow, will retrace as a closing to our open, high, low, close weekly development. What did we do today? We expanded back up into the range. So as you can see, I know my shit. If you guys aren't familiar with who I am or what I trade, I am Snowski. I am a QT and smart money concept trader utilizing the theory of time and price for pretty much precision behind the markets. Now, without a doubt, let's hop into today's video. Before I break down my trade that I took on 30-minute power of 3 shorts, capturing 92-ish points on NQ, I want to put a strong amount and great emphasis on our higher time frame. For a lot of people that know my content and know how I personally trade with the utilization of time and price theory, higher time frames is pretty much our most important aspect of day trading. And the reasoning behind that is because higher time frame gives us the hints of what the lower time frames are going to do, and that is pretty much the entire study of fractal. Time is fractal, sequential, what am I talking about? Time is fractal, price is fractal, right? Every concept that ICT's ever taught, power of 3, MMXM profiles, AMD, XXAMD, all fractal. They're repetitive. They happen on higher time frames, lower time frames, and they move in sequence. Okay, so if we understand this, and understand that market maker models are fractal and also move in correlation to Po3 and QT, well, how did I know personally that today was going to be bullish as a retracement back up into the weekly range that I stated for 100% free on my Snowski outlooks? Is for the understanding that, okay, we understand that smart money concepts and quarterly theory are correlated. They are always correlated whether you understand it or not. So understanding this, power of 3, market maker models, quarterly theory, the study of time and price, they're all correlated, meaning they're going to be moving in sequence. Understanding that if something specifically happens under a built criteria, it's going to move expandingly, maybe aggressively, accumulatively, right? All of these different things we can assume and predict how the market's going to be moving way before they even happen. So understanding that I was expecting a retracement back into our weekly range today, what gave me that conclusion that I was expecting that is the study of power of 3, but also market maker models. Market maker models can sometimes get very in depth. If you guys are unfamiliar what a market maker profile is, I have hundreds and hundreds of free studies out personally about market maker models. One video that I actually posted up to YouTube, but if you actually did not see it, I have a link in the description of this video to join my 100% free WAP, where I have that video under there regarding MMXMs. But one rule of thumb behind market maker models is that they will always be moving in stages. Okay, these stages are either called reaccumulation or redistribution stages. Now, both the buy side and the sell side of the curve are going to have different criterias behind them. They're going to have different things that they need to get done in order for price to move to a different stage. Now, what do I mean by this? Understand this. I want you guys to have your notebooks out and write all this shit down, as this is going to get very in depth. The study of quarterly theory in alignment with market maker models is to understand that in regards to QT, we get what's called sequential SMTs, or further known as time-based divergences. So instead of utilizing just basic cracking correlations that ICT teaches, such as just SMT, which SMT is regarding price, not time, sequential, meaning time-based SSMT, is giving us the hint as in, okay, price is going to reverse here. Now, what happens if we do not have a sequential SMT to back up a specific pivot in the market? It is simply proving to us that that pivot is not protected. So you may ask, what's the difference between protected and unprotected stops? Unprotected stops are stops in the market, meaning liquidity zones, where it pretty much lacks a sequential SMT, which then gives us the advantage as a smart money concept and QT trader. We now have a clear draw on liquidity that people aren't even thinking about. So a lot of people may be asking, how did I know we were going to be pivoting all the way on Wednesday at the 11th as structure on the higher time frame looked very, very bullish? It's simply due to the fact that market was not ready to go. And how did I know that? Was the identifiers of sequential SMT. You don't have to overcomplicate things. I personally do overcomplicate things, but that's simply for just precision and also teaching my inner circle students the way that I look at the market. But look on it in a simplicity scale. If we lack sequential SMT at a specific low or high in the market, it gives us a clear draw on liquidity, meaning that reversal pivot is not necessarily a strong pivot. It is not meant to happen, but what is it actually doing is it's engineering liquidity for the upcoming quarters ahead to pretty much go against. So now that we understand market maker models, understanding they're going to have stages of reaccumulation and redistribution, what we can see in our 1 hour fractal MMSM that we are currently in, during the buy side of the curve, which we understand is going to engineer stops, what is the true identifier that told me, okay, we are in a market maker sell model all the way up at Wednesday the 11th before this curve even happened? Excuse me, it's simply the identifying of, we understand our entire higher time frame narrative is lower. All right, I've been speaking about this in our Snowski outlooks for a very long time now, that due to needing a quarterly and early year manipulation, our quarterly BISI on our 3-month time frame, which is pretty much unmitigated at the moment, is a very clear draw on price. On this quarterly BISI, which also engineers a lot of stops, which if you scroll out, below this low is our quarterly BISI, and we engineered relative equal lows coming into last week, which is the low of the month and low of the quarter. Seeing this as, okay, there is no time-based SMT at last week's low once we started reversing. What was I looking for as identifiers of price to understand that we were going to be in a market maker sell model? First stage, second stage, reaccumulation. What do I want to see at the low of these reaccumulations? Zero sequential SMT, because sequential SMTs prove that that stops protected. But if I want it to be a draw on liquidity, I do not want it to be protected. And what happens? No sequential, no sequential, no sequential. Throughout the entire buy side of the curve from Friday last week to then Monday to then Tuesday until Wednesday, we put in the smart money reversal, turtle souping and having weekly cycle at the highs with YM. This entire buy side of the curve, this 3-day combination, or I'm sorry, duration, is just engineering. So if we understand that an entire buy side of the curve was straight up engineering draws, and our entire higher time frame narrative, draw on liquidity, the quarterly BISI, was not met yet, you have an external draw and an internal draw. Internal being a weekly draw and external being a quarterly draw. So now we have strong draws on liquidity, and all we're looking for now is for market to pivot on our smart money reversal. We understand smart money reversals and manipulation quarters are pretty much going to be signified by a cracking correlation. Weekly cycle SMT with our day-to-day highs. We can see that YM did the damage over here if you were to scroll out on a higher time frame scale. YM failing to put in that high, that's a failure swing due to us weekly cycle SSMT, which is our smart money reversal pivot. So now, how did I know we were going to be reversing back up into the range on a Friday. Not only due to the fact that today was the last day of a weekly power of 3, and we understand we're likely to come up and retrace back up into the range for a closing price of our weekly power of 3. You can use that utilization for any power of 3. What stage specifically was this? If we had a smart money reversal, first stage redistribution, playing continuations of the weekly cycle on the SMR, and then we distributed going against our intermediate term low, and now our long-term low is pretty much the only clear draw on price. If we take out our intermediate term low and start accumulating, what's due now? We understand our last stage of a market maker profile is the unicorn model. ICT has taught this many times. Before a unicorn model initiates, we need a second stage redistribution. Now, that's not 100% always. There are times when we just simply have a first stage redistribution, but due to the fact that we have long-term low, intermediate term low, and short-term low, I'm in need of 2 stages. A lot of the times you'll see just one stage of, let's say, long-term low and then short-term low, and a lot of the times you'll see one stage redistribution, but in this case we have 3 stages of accumulated stops with no sequential SMT, which has given me the hint that we're going to have 2 stages of redistribution to go against these stops. Understanding that unicorn model is going to be the last play, the most aggressive play, and well, we're coming into Friday, a closing price of a weekly power of 3. We are very likely to get a second stage redistribution. So now hinting back, tomorrow we'll likely have a retrace close for our open high low close, expanding into next week where I have eyes on continuations until proven otherwise. What do? Reverse back into the range. Why? Because this is second stage redistribution. Once second stage redistribution initiates, we then what? Unicorn. A very aggressive move. ICT stated that unicorn is the most aggressive move. It is the quickest. It spools the most aggressive. Now, I want you to think. If you go back to my prior videos, I think it was like 2-3 videos ago, and you watched them, I hinted at something before regarding XAMD, AMDX. I stated that 90% of the time, and this is actually collected data from my personal self and my inner circle students, 90% of the time, weekly cycles tend to be XAMD, meaning Monday tends to expand off of Q4's delivery. So now think about that. If expansion tends to be aggressive, right? If we're to look to hint this week, expansion was very aggressive and all we did was spool one directional for the entire morning. What do you think's going to happen? We're expecting unicorn. We're expecting aggressive dumps all the way down to the unprotected original consolidation low, which is 550 handles away. What do you think Monday's likely to do? Sitting on a unicorn, sitting on an expansion day for the weekly cycles, what do you think's going to happen? Use your brain, use your logical sense here. How do you think I'm so good at reading price? It's because you have to collect data and build things upon probabilities. So if we understand that power of 3s and market maker models fall into alignment, if you guys aren't familiar with my previous MMXM lecture on YouTube and the free WAP lectures, please go back to that and come to this. It will make so much more sense. But something that I hinted in there is the correlation between PO3 and MMXM. Power of 3 and MMXM are very correlated. And why do I say this? Is however long the buy side of the curve took, as in durations of power of 3 candles, we are very, very likely to see pretty much the exact replica of duration for the sell side of the curve. So now let's look at this. We opened up our week on Monday, which was our first stage reaccumulation, which was 1 day, 2 day, right? 2 days. And then we pivoted on Wednesday. So how much was the buy side of the curve in example of this week was simply 2 days. But we understand that the original consolidation low was on Friday. So in a sense, how many days did it take for the buy side of the curve to tick? 1, 2, 3. And then we smart money reversaled, which is our initial pretty much long-term high. This is our pivot point, our smart money reversal. So it took us 3 days to accumulate stops. First day, second day. Why do you think we didn't deliver below here today? Why do you think we didn't go there today? Because it's waiting for time. That is the theory behind time and price. Power of three and market maker models move in sequence. So if we understand that it took us 3 days to engineer stops and then have a pivot point with the weekly cycle for a smart money reversal, distribute, well, it only took us 2 days to initiate a pretty much pivot point, a sell side of the curve. So that's telling us that, okay, we need 1 more day to complete this market maker sell model, which is stating that, okay, if I'm correct and we are due in need of a unicorn model, it's gonna be on Monday. It is going to open up on Monday. It's going to be an expansion Monday for our weekly cycles, and it's going to expand aggressively 550 points lower in the market to target against the original consolidation low due to the lack of sequential SMT to prove its reversal pivot, and very likely to continue down to the quarterly BISI for a new week manipulation. If I'm correct, you got to subscribe. That's as simple as it is. If I'm correct, come back to this video and subscribe to my damn channel. If not, you can hate on me. Okay, guys. So now that I got you guys some pure sauce about market maker models and power of threes, let's actually hop into my trade today. What we're going to do is going into a lower time frame. How was I able to actually profit off of shorts this morning for our 30-minute power of three, with the understanding of our narrative being bullish for a weekly power of three close and the second stage redistribution regarding our market maker model? Why did I specifically want to see us deliver lower today? Now, a lot of you guys may ask, why did I short 1 micro in a highly confident short, right? A 90-point short. Let me explain. Okay. If you guys aren't already familiar with like me and the way I trade, I am trading multiple accounts at the moment, right? I am trading 5 Apexes and 5 Tradeifys. But the thing about Apex that is different than Tradeify select accounts, and Tradeify select accounts being daily withdrawals, is the daily Tradeify select accounts don't have consistency rules in the activation stage, right? They do in the eval stage, but they don't in the activation stage. And because of that, it's very transparent on how many cards I can put up, and I get to kind of just be very free with the trades as long as I'm consistent. But the thing with Apex is they run under a 30% consistency rule, meaning I cannot bang out a crazy trade every single day because I need to consistently win in order to make a payout. Now, on those 5 Apex accounts that I've been greening very well this entire week with, if you guys aren't already familiar with my social medias, you go to that link in the description. You'll see I've been greening every single day this week, literally 100% green. I didn't trade Monday, but I traded Tuesday, Wednesday, Thursday, and today, green every single day. Coming into today, I was looking at I was pretty much averaging out, right? You know, Apex doesn't really have a good dashboard. I was averaging out my consistency, and I figured out that I couldn't withdraw a payout yesterday. And I was like, what is my consistency? Turns out you need a 30% consistency for Apex withdrawals. And I was at 31. What the fuck? I was at 31% consistency. I was over by 1%. So they were denying my withdrawal. So what did I do? Is I literally sat here 30-minute power of three. I did not trade on the all the accounts. I was simply trading on my 5 Apex accounts to simply get the consistency, and I banked the short for $180 off of a 90-point short, or I'm sorry, correct me if I'm wrong, 190, and that short got me my consistency to, I think it was like 28-ish or something like that. I don't know, very, very stupid, but besides the point, I was still correct on my short this morning. Why did I want to short against a trend, against a bullish market? Was simply sequential SMT. If we understand that we are going to be pivoting in the market, we always want to be referencing to external and internal SMTs, sequential SMTs, right, time-based, to prove reversals in the market. Due to us having a lack of sequential SMT at the low of the day, right, we did have, I'm pretty sure, a 90-minute bullish SMT, but you guys understand that's not considered an external. That's more of an internal. That's going to prove a reversal off of a higher time frame. So looking at high of the day and low of the day, I'm looking for signatures of, okay, what is very likely to occur before this move actually pumps. And that is the simplicity of, I want to see a resweep of these lows to purge these unprotected stops. That is as simple as it is. It engineered unprotected stops, and it's a clear draw on liquidity before we actually reverse, meaning I'm trading the manipulation. As much as I do not suggest trading manipulation, it was very, very clear that that was going to happen. So coming into today, what did I see? On our higher time frame, what I'm actually going to do is I'm going to go to replay for you guys. It's going to be a lot easier for me to actually break this down. Take off my power of 3. We're going to go to our 15-minute. Coming into our 15-minute chart, if you guys are unfamiliar with QT concepts, one concept is called hidden sequential SMTs. Now, I personally teach it, but the simplicity manner, if you guys just want to understand the basis of it, it is simply an SMT between the bodies and not the wicks. Okay, so what we can see here is utilizing the bodies of our previous 6 hour and our opening of quarter 3, we could see NASDAQ failing to do the damage above the bodies of our previous 6 hour candle as YM did the damage. So YM doing the damage above with the bodies proved that we had what's called a pretty much hidden SMT. So if you're looking at it as in a sense of 15-minute, this is our external. This is going to prove a reversal pivot. We now have an external hidden DCS-SMT, or what you can just simply call a hidden SMT. Or I'll say hidden external SMT. There we go. So we have our hidden external coming into our lower time frame. We did have a 5-minute confirmation, but that's something simply I'm holding to inner circle students. I hope you guys respect that. But coming into our 1-minute time frame, we had our swing divergence. And then from that swing divergence, which was our initial 30-minute power of 3 open, high, low, close, which is, where's my ICT candles? There we are. 30-minute. We can see where are we? We opened, manipulated higher, cracking correlation, external SMT, there was an internal 90-minute, and then we started reversing. Where am I looking for? Change of state. 1-minute CISD. Close below it. Buy buttons. Sell. I put the stops right here above the body of the change in state, and TP was as simple as the draw on liquidity, which was the unprotected stops. And you can see how quick that shit got hit. And bang. That's what I call fucking textbook. Textbook 30-minute power of 3 open, high, low, close. External, internal SMT, 1-minute cracking correlation, 1-minute change in state. Bang, short the market. Freest 90 points ever. And that was manipulation for the day in order to turtle soup the low of the day and pretty much prove higher prices. All right, guys. So if you guys aren't already part of Collectors Club, my 100% free Discord server, please join that up. That will be in the description. I'm currently at 980 members, 20 away from 1,000. That is going to be a beautiful milestone. If you guys loved this video today and enjoyed the free content, leave a comment below. Let me know that you enjoyed this so I can actually keep posting more and more out for you guys. But I hope you guys are having a wonderful week. Coming into next week, I'll be giving you guys even more outlooks if you guys are part of Collectors Club in my Snowski outlooks. But of course, I'll see you guys in the next one. And as always, I'll see you at the top. Peace.